Okay, Jeff, let's say you've got $1,000 to invest right now. You're really interested in investing in e-commerce. Let's each pick a stock that we think would be the stock that we would buy right now if we were going to put $1,000 out there to work, and come up with the two stocks that we think would be best to invest in e-commerce right now. What do you say?
Okay. Okay. But neither of us can pick Amazon.
Okay. Yeah, I like that. I wasn't going to pick Amazon, so that makes it really easy for me. There were
Okay.
two I was between. So the one that I'm going to come down on to is, I think it's an easy decision for me. So, all right, you got yours?
Yeah.
All right, I got mine. Let's do this. I'm Jason. That's Jeff. This is Investing Unscripted. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, go to our special link. You see it on the screen there. It's fool.com/unscripted. If you go to fool.com/unscripted, you can get another 10 ideas. You can get access to The Motley Fool's 10 best stocks to buy right now. Go check out that link. All right, Jeff, who's going first?
I'll go first. I'm going to talk about Coupang, which is an e-commerce player in South Korea. So saying something is the next Amazon is something that happens with every e-commerce company. But Coupang, I think, has done a pretty nice job of actually building a business following some of Amazon's best moves. So right. The core of their business is e-commerce.
Like following the playbook in a way that actually works within the market that it's competing in.
Correct. And you'll see the similarities as I tick through how the business is structured. So the biggest part of their business is e-commerce, exactly like you see on Amazon. There's first-party sales, there's third-party sales. But because they operate in a densely populated country like South Korea, they can reach, I think, something like 90% of the population with same-day delivery. It's some ridiculous amount of scale they have because it's so densely populated. On top of this e-commerce business, they've, like I said, followed a lot of the Amazon playbook. They have a subscription service called the Rocket Wow membership, and that gets you benefits beyond what a regular user would get. They are branching out into things like food delivery, fintech offerings, a streaming service, right? So you're seeing a lot of the Amazon playbook come to fruition with Coupang. What I'm really interested in is a lot of these things I just mentioned that are beyond the e-commerce part of the business fall under their developing offerings segment, which is where all these new, more exciting TAM expanding business ventures live. And that part of the business is growing a lot faster than the e-commerce part of the business, although at this point it is still a very small amount of total revenue. So you're showing it here on the screen.
So you see on the left here, you've got the 5 bars. This is the breakout of independent quarters. So you see 33% revenue growth year over year in its most recent quarter in that developing offerings, like that incubator business you're talking about. But for the trailing 12 months, in other words, the past 4 reported quarters, it's up more than double. This part of the business is growing exceptionally quickly as things are starting to work, right? I think that's an important part of this.
Yeah. And again, growing off a small base, but just another way to look at it, the developing offering segment is growing at a compound annual growth rate of 76%. And the product commerce revenue segment, which is the e-commerce business primarily, is growing at a very healthy CAGR of 15%, right? So no problem with the growth of the biggest part of the business, but the more exciting part of the business is slower, but growing much, much faster.
All right. 10-second finish here for your stock. Any concerns?
The only concern I really have, well, one is where else can they expand? They're trying to branch out into Taiwan, so that's something to keep an eye on. But my bigger concern is valuation. Right now, it's trading for 1.8 times sales. That's near the most expensive it's been after the IPO craziness that always happens when companies become public. So pricey, but $57 billion market cap. If this company can do even half of what Amazon has done, you'll look back on today's valuation and think it was perfectly fine to pay.
Yeah, I'm going to go with the stock that was kind of the first next Amazon that was really growing up at the same time as Amazon, and that's Mercado Libre, ticker MELI. So Mercado Libre was founded 99, 2000, somewhere on there, really not too awful of a different time than we saw Amazon being founded. The difference, of course, is operating in Latin America. It operates in 12 countries, the largest economies in Latin America. It's really started to make headway in Mexico, so getting further north. And that's, to me, one of the most dynamic, exciting economies. So a couple parts of the Mercado Libre story that are exciting. Number one, you have that core e-commerce business that continues to be by far the top dog and first mover in those countries. They have the infrastructure in place. They are incredible operators. They're trusted. All of those things really, really matter. And they're advantages over the big players. We've seen other big players try to get established there, and everybody else has been slow to really get any established traction. And it just has such a massive advantage there. And the other part of it is Mercado Pago and the other parts of the fintech business, which are really facilitating all of the e-commerce business. Did you know that Mercado Pago was started in 2002, Jeff?
No, I didn't realize it was that old.
It's been around that long, and they had to, right? Because these are cash economies that are still largely cash economies. You go back 2 decades plus ago, they were even more so. So to build that trust, they had to build a platform for people to be able to go to local places, load money onto an account, and then be able to buy things on Mercado Libre. And it took about 20 years for the transaction volume on Mercado Pago to match the total revenue of Mercado Libre. But a lot of that revenue, that the dollar volume that's happening on Mercado Pago is happening off of it. Now, since the total payment volume on Mercado Pago caught up with the total transactions on Mercado Libre, since then, over the past 5 years, now Mercado Pago is about 4 times larger in terms of volume than Mercado Libre is. In other words, it's become like a de facto way that people buy things and pay for things in Latin America. It is extraordinarily strong. This is a very trusted brand. They've also built out their lending business that's done exceptionally well. About a year and a half ago, we saw some yellow flags with default rates started to go up, but it looks like they've addressed some of those concerns. It's still a risk there, but I think as much as this has been a massive, massive winner, this is still early middle innings for Mercado Libre in terms of its growth story in Latin America, and it should continue to be a big winner for years to come.
All right, so I'll flip the question to you that you gave to me. What's your biggest concern with Mercado Libre?
The 2 things. Number one, I talked a little bit about that finance risk part of the business. The vast majority of the company's earnings growth over the past few years have been because of fintech, and a lot of it is because of lending. Lending is a very different business than selling consumer electronics on the internet, right? So the risk profiles are different. It looks like they've done a good job with that, but that I'm watching closely. And you mentioned valuation with Coupang. I think there's a little bit of valuation risk here with Mercado Libre in the near term, but I think the key for both of these stocks, Jeff, is valuation is not going to be the reason investors lose money over the long term from these prices. It's about business execution. If they both continue to execute on their growth strategies and deliver and remain like the top dogs in the markets where they've been the first mover, I think both of these can be absolutely market beating investments for the long term. I think this is a nice little mini basket, a couple of stocks. Take your $1,000 and divide it between the two. I think investors are probably going to beat the market pretty soundly over the long term.